Hello everyone, my name is Thanh Giang and I would like to send my warm greetings and best wishes for good health to my teacher and all of you guys who are watching this video today. Today I'm going to present about mobile payments, Fintech versus the bank giants. In recent years, we have all witnessed about how quickly technology changing in the way people pay and transfer money, and even think about banking. So instead of using cash or plastic cards, many people now just tap their smartphones or send money just with a few clicks. This topic is not only interesting, but it also highly relevant to our daily life. And I divided my presentation into four main parts. The first part is 3 types of mobile payments and how they differ. The second part is which age groups are most likely to adopt mobile payment apps and the reason behind it. The third one is why fintech startups have had difficulties competing with the big tech giants. And the last one is the case of Zelle, a mobile payment service created by banks, and why it has grown so quickly in the last few years. Now, let's move to the first part, the 3 types of mobile payments. Mobile payments are usually divided into 3 categories, each serving a different purpose. The first one is universal proximity payments, such as Apple Pay, Google Pay, Samsung Pay, allow users to make payments at many different merchants. They use NFC technology, which means a person just needs to hold their phone near payment terminal. This is very convenient because it replaces physical cards at a wide variety of stores. Next is branded proximity payments, are created by large retailers for their own customers. For example, Walmart Pay or Starbucks Pay can only be used in their stores. These systems are often linked to loyalty programs, rewards, or promotions, which helps companies strengthen customer relationships. And the last one is peer-to-peer or P2P payments are focused on sending money directly between individuals. Apps like Venmo, Zelle, or Square Cards make it possible to pay a friend back for dinner, split bills, or send money to family instantly. So the main difference between these 3 systems are the scope of usage and the target users. Universal payments work almost everywhere. Branded payments are restricted to one retailer, and P2P payments are about person-to-person transfers. Now, let's move to who actually use these apps the most. Research shows that the millennials and Gen Z are leading the adoption. There are 2 main reasons. The first reason is that they grow up with digital technology and smartphones, so they feel more comfortable adjusting their devices for financial transactions. Unlike their parents or grandparents, they rarely use checks and they are less adjusted to plastic credit cards. The second one, also the last one, is younger generations value speed and convenience. They prefer instant money transfers or one-tap payments instead of waiting for traditional banking process. For example, more than 70% millennials use P2P payment apps, while only about 38% of baby boomers do the same. So this generation difference shows that The future of mobile payments will largely depend on the habits of younger users. Although fintech startups were the first to bring mobile payments into the spotlight, they face serious challenges when competing with global tech companies. Why is that? The main reason is that companies like Apple, Samsung, Google, and PayPal already control the smartphone hardware, the software, and the massive user base. For example, Apple Pay comes pre-installed on iPhones, giving it millions of users instantly. Startups cannot compete with this level of reach. Another challenge is trust and resources. Big tech companies and banks have strong reputations, billions in capital, and partnerships with retailers. On the other hand, small fintech firms often lack scale and brand recognition. This makes it harder for them to convince people to switch. And finally, large retailers and banks have also created their own apps, such as Walmart Pay or Zelle, which further increase the competition. As a result, fintech startups must constantly innovate to focus on niche markets to survive. And how about Zelle? So let's move to the last part. What is Zelle and why has it grown so quickly? Zelle is a very interesting example of how traditional banks have responded to rise of fintech. It is a digital payment service launched by a group of major U.S. banks, including JP Morgan Chase, Wells Fargo, and the Bank of America. Zelle allows customers to send money instantly using just an email or phone number. Unlike Venmo or PayPal, Zelle is directly integrated into customer existing bank accounts, which give it a big advantage in terms of trust and convenience. The service is also free, and the money happens almost instantly, compared to other methods like wire transfers that could take days. This has helped Zelle grow rapidly. By 2022, more than 62 million people in the US were using Zelle, and it processed over 365 billion in payments, which is even higher than Venmo. The key reasons for Zelle's success are strong support from big banks, seamless integration into existing system, free transfers, and the ability to scale across the thousands of financial institutions. So, to sum up, mobile payments can divide into universal proximity system, branded system, and peer-to-peer payments, each with different strengths. Younger generation, especially millennials and Gen Z, are leading the adoption because of their comfort with smartphones and their desire for speed and convenience. While fintech startups were pioneers in this space, they now face competition from technology giants and even from banks that have entered a market with powerful resources. Among them, Zelle stands out as a successful bank-led solution that has grown quickly due to trust, convenience, and scale. The big picture is clear. The future of mobile payments will not belong to just one group. Instead, it will be shaped by fintech innovation, the influence of tech giants, and the adoption of traditional banks. Vital role in making financial transactions faster, safer, and more convenient for customers. So, thank you very much for listening, and I hope this presentation has given you a clear picture of how mobile payments are changing in financial world. Thank you and goodbye.